Good morning, everybody. Happy Monday. It's May 8th, 2023. Great to be with you today. My name is Bob Lang. It's time for our Daily Bites, which we bring this to you every Monday and Thursday morning at 8:30 a.m. Eastern time, or roughly around there. I got back from a walk with the puppy this morning, and so I had to a little bit of a delay here, but here we go. Anyhow, just let's talk about markets here for a little bit. So last week, very impressive end to the week after getting off to a really slow start, and you can see on the chart here, Tuesday, Wednesday, Thursday fell really hard, and then on Friday that super strong rally managed to push right back up through the 50 and the 20-day moving average, which were converging at the end of the day on Thursday. We had a big, actually, right to the bottom of that lower Bollinger Band here on Thursday. Big surge on Friday. We're following through a little bit today. We are at we're up a little this morning, up about 6 handles. Nasdaq down a little bit, and you can see that volatility dripping down all morning long. Popped up a little bit here just about 5 minutes ago, but you know, there's some really interesting things going on here, especially with the charts, right? And we're just kind of going sideways here for a bit. Certainly in the month, since the month of April started, we've been trapped in a range here, even tighter range than when we have been for the whole year. Call it 4,200 on the upside, 4050 on the downside. The bigger range, of course, is 4,200 on the upside to about 3,800 to the downside over here, right? That's the bigger picture. So if we get a move above this box here, roughly 4,200 or 4,205, you know, could be a game changer. We'll have to see. I don't know if we're going to make it up there, but certainly I'm just taking the clues from the markets and just playing everything just one day at a time. That's all we have to do. Just play the markets one day at a time. Now, taking a look at some other charts, we can see this is one that we put out a lot, and I reference quite a bit, is this stocks above the S&P 500 50-day moving average, right? And this just basically tells us how many stocks are in a bull market and how many are in a bear market. So if you find yourself below the 50-day moving average, we tend to say that we're below the box and we're in a bearish condition over here. Now you can see, since going back to September, October, we've spent a fair amount of time above the box, which is bullish, right? Above here, we spent a little bit of time above there in January, February, came back down. Smaller amount of time and not as and lower highs here in April, but we're ticking right back up towards that 50 line again. So last week we were looking like we were going to plunge down, and Friday we got a what we call in hockey, got a stick save on the markets, and now we're maybe heading back up. So that's important to point out. This is the breadth of the market. Now we have new highs, new lows. This is another chart that we like to reference quite often, and we saw that new highs actually ticked a little bit higher on Friday. But what's interesting was that on Thursday we had this big red bar down, minus 200 or so on the new lows list. A lot of names, a lot of energy names, a lot of bank names were on this list. But then we turned right back around, and some of those names actually came off their lows, and they don't qualify for that new low list as long as they don't make a new low. And we saw some stocks that were actually making new highs on Friday. So that's interesting. We're right back into that zone. Now, speaking of zones, the volatility index, right? Let's take a look at that. The VIX got pounded again on Friday. Now, we talked about this last week in the chat room, and I put a video together and explained to everybody that there was quite a strong bid in the markets on Friday morning. So at that point, I realized it didn't really much matter if the jobs report was good or it was bad. The markets were going to go up regardless, right? It's because the markets were seeing that the passage of news, regardless of whether it was good or bad, was going to be a relief to the market. And this has been the pattern that we've noticed for the past 6 months or so, since early part of November. When news is released, a CPI number, a jobs number, a Fed meeting, or something like that, durable goods, other economic data, maybe a foreign bank, central bank moves their interest rate policy. Whatever the news is, the market seems to take it as, okay, that's just one thing that's behind us now. We're past it and we're moving forward. And I think by and large, what I've noticed over the past several months, 4, 5, 6 months, the big money, hedge funds, mutual funds, pension funds, those sort of thing, they are getting themselves prepared and ready for the Fed to finish with the rate hikes, right? That's just what we see. That's an observation. Now, is that true? Is that going to happen? I don't know. It all depends on the data, and all depends on what the Fed does in interpreting the data, right? But I could tell you that the money flows in the markets are telling us that people are getting prepared for the end of those rate hikes. Now, are they getting ready for a rate cut? I don't know. I don't think so. The Fed has pretty much been adamant at saying that higher rates for longer. What does longer mean? I think at the very least, in my view, and in the data that I'm looking at the very least, February of 2024, 9 months down the road, it's probably not going to be the time for the first rate cut unless things really fall out of bed. Now, the jobs report last week was very strong, and it also showed us that the jobs market remains still very tight. Wages were increasing as well. So that is a report that the Fed is not going to really appreciate in terms of inflation. They are going to appreciate it in terms of helping GDP, helping growth improve in 2024. Now, we had a 1.1% preliminary reading in first quarter of 2023. That's down from fourth quarter of 2022. So we'll have to see where the market is looking at for the second quarter as well too. We'll get some new readings on that this week. But I'm going to finish up here and talk about a couple of stocks that I've been looking at over here. I see one that I've had on my radar here is a Snow. It made a run up towards 160 last week, and pulled back a little bit off the highs. So this is what I'm looking at. If you can get above 160, the stock has some legs to keep moving. They don't have earnings out this week. I do also have WYNN on my radar, WYNN. And this has earnings coming out later on this week. And this stock has really built a nice, strong base above $102 for the past 2 months here. Look at that nice base here. Can't seem to get above 117, but it doesn't break below 106, 105. So we've got a nice tight base over here. And what happens is the longer the base, the bigger the space. That term was coined by Louise Yamada, famed technician, world-class technician. So this is again, the longer the base, the bigger the space, so more space to go up. So we'll see if we can get some movement up there. I'm looking at maybe some June or July calls on that one. Let's see, what else am I looking at over here? A name called Allegro Microsystems. I've never played it before, but it came up on my radar screen this weekend. ALGM. The chart doesn't look great, but it does have some good earnings ready to come out here. A lot of these semiconductor names have been struggling as of late. This is another one. The trade desk comes out with earnings this week, and this is again another stock that has got a really nice pattern of higher highs and higher lows. This is one that I'm going to be looking at for a play this week as well too. TTD, $62. Maybe playing something like an in the money option on that one. And then finally, McKesson, MCK, is another one that I had my eye on here. Had a really strong day on Friday and closed above some steep resistance here. This stock is in the healthcare management business with computer systems and so forth. Used to be water. They used to have own a company that delivered bottled water. But anyway, so McKesson is one that I've got my eye on over here. We'll take a look at that one as well. But as far as any other names like Disney, not real interested. Airbnb actually has got my eye as well. I'm going to be looking at that one. They had fabulous earnings last time around. From what, and you can see what happened after those earnings came out in February. Blasted off to $145. It came right back down again. Now, in my experience, what I've noticed over time is that when a company delivers a strong earnings report that is kind of a surprise, those things come in threes, right? So if that axiom holds true, this next report is coming out this week on Airbnb. That's my dog Tony. If that holds true, this report this week will be number 2. And then we'll have number 3 coming in August when they report their second quarter. Axon is another one that kind of meets that criteria. They've had 2 straight quarters of really strong growth. Axon, AXON, that's a name that I'll be looking at as well too. So there's a few names for you to chew on there. Take a look at some things that I'm looking at as well. So I think I'm going to wrap it up there. I wish everybody a great trading day. Again, keep some protection on. It's okay to keep some protection on. I've become a much better trader, much more focused, knowing that I have some puts on. Even if they're losing money, it's okay. I can find some ideas and feel protected that in case the market do sell off during the day or in the next couple of days, I have some protection on as well too. So have a great trading day and happy Monday. And I'll see you guys all back on Thursday. Take care. Have a great day, and then I'll see you in the chat room later on. Bye.